Good evening. So the topic that we're going to be treating tonight is fair value gap, and that's FVG. The full meaning of FVG is fair value gap. So what is fair value gap in the markets? Let me give this a full screen. I'm not locking you. Let me give this a big this and give this 16 as well. So FVG is fair value gap. What is FVG in the markets? Now, there are several reasons and there are several things that actually cause fair value gap in the markets. So yeah, so there are several things that actually cause fair value gap in the market. Fair value gap can actually come as the short definition that you can just give to fair value gap is a small imbalance. Let me call it a small imbalance, a tiny imbalance in the market. And fair value gap mostly happens whenever market is trying to create a sort of volume. Maybe we are having some kind of volume coming in into the market. So in most cases, we tend to have a fair value gap in it. But I will give you an illustration of a fair value gap. Let's assume the market is coming down. We are having a sell signal coming down like this, with your wick above here, something like this, and something like this. Okay. So I will not be drawing wick to the other this thing. So I just want to make my illustration to be more clear for you. And maybe we have another candle coming down like this. Another one is coming down like this. It's coming down like this. And all the wicks, let me try to draw this and make it faster. And all these wicks, which are the tiny this thing, they were coming all together in conjunction with this place. So we are now having FVG over here. So maybe we have, okay, a wick like this, another wick like this. So we have wick like this. Maybe we now have a short wick over here, and this candle is probably long a little bit. At times, your fair value gap can actually come in a short format. It can come very short, but the thing that I want you to know is that fair value gap is one of the most important entry in the market. But the truth is that if you don't understand it actually, you don't have to use it as the only confirmation for your entry in the market. So now that space, so let's now say we have another candle here, but from here to here, if you look at this place, this wick does not meet up with this wick over here. This wick over here does not meet up with this wick over here. So the market is creating a fair value gap like that, and it has created it. Now, the next thing that you are going to wait for is that you wait for another trade. You wait for market to maybe it keeps going down, keeps coming down, blah blah blah. So you now wait for your trade to later come back up like this. Maybe after few days, or maybe after few hours, or whatever, you now have a buy that starts coming up like this. The buy starts coming up like this as a green candle like this. So starts moving up, and we created a support, blah blah blah, and it starts coming up like this until the trade gets inside your fair value gap. This is where you now have to enter your market. In the fair value gap, this is where you have to enter your market, and then start expecting a move to start coming downward all the way from there. You understand? So start expecting the market to sell from here. But just in case market does not go in your favor, your stop loss is going to be above the candle over here, above the candle that created the FVG. Now, what is your stop loss? Your stop loss is something like this. So when you place your risk reward ratio over here, so maybe you put your stop loss above here and then your take profits down below. So you expect the markets to do what? To start selling all the way from there downward like this. So I'm going to check the chart and then we are going to look for some illustration of a real live market of where the market actually did some fair value gap for us. So let's look on gold. Let's look on gold and try to see what's happened here and then where we might have some sort of fair value gap in the market. And one thing that I want you to know is this: if your market is going in an uptrend, let's assume you expecting buys from the market, FVG can actually be a point of entry, a point of interest that you are going to use as an entry for you to enter your market. And another thing that I want you to know as something that is very, very important is that if market is selling, let's assume that we are having a sell trade. So FVG, like the fair value gap, is another thing that you can actually use as a sort of confirmation for your trade to continue going down or coming up. So wherever you are seeing fair value gap in the market, wherever you are seeing it, maybe on gold, maybe on other pair in one way or the other. So is a situation, is a place whereby you are going to use as a kind of confirmation for yourself that, okay, this place, since I am coming on a downtrend, then what am I doing here? I am selling. So since I am going in an uptrend, what am I doing here? We are buying. So okay, now let's look at this place. Let's look at this place. So there was a move over here, and this move is actually a very wonderful move. And if you take a proper look at it, gold was doing what? It was actually coming in a downtrend. It was coming in a downtrend. Now, and during the process of it coming in a downtrend, if you take a proper look at this place, gold turn like this all the way from here back to here, and then when it comes down like this from here, you can see, and then it come back here to make a retest and it started selling. So this is a very perfect example of a fair value gap. Now, if you still look at this place, if you look at this place, this is a fair value gap. Inside here, this is a fair value gap. Within here to here, this is a fair value gap. And as you can see, the market respects it. The market respects it. The moment it gets to that place, what does it do? The market actually sold. It sold inside here, and then we had some drop that actually came down. So before it started buying up, you understand? And if you look at this place at the same time too, so we are having a support here and a fair value gap here as well. So if you look at this place, so this candle over here does not meet up with the candle that is here, that is here. So this space that is here, the market come down inside this space, but on this FVG, come back here to this other block over here, then to start buying. And if you still look at this place as well on gold, if you still look at this place on gold, this is a perfect example of a fair value gap. Market has bought over here, then it's come back here inside this fair value gap. And what I told you, SL below here, and it bought, it keep pushing up, keep pushing up. So now the reason why we can call this place a valid fair value gap for us to start buying here, and if you take a look at it, it actually bought a little bit, is because this zone, we are coming all the way from one fair value gap, from one FVG to another area of resistance, which is above. So the moment the market gets to this place, you are not expecting another buy. Are you getting me right? To keep pushing up like that, because you are actually buying. So, and we bought all the way from here. So everything is not going to be just fair value gap FVG that you are going to be looking at. So you need other confirmations for you to actually enter your trade in the market. So I'm pretty sure that you understand what I'm trying to explain. So with the explanation of what I did here, fair value gap should not be a challenge for you anymore if you really have to be looking for it in the market actually. So now, this fair value gap, you cannot find it in different markets. You can find it on indices, on BTC, on gold, on whatever, but I'm just using this as an example for you to understand what fair value gaps, what it looks like. So let's look for other places. Probably we do find another fair value gap. This place, this is an FVG as well. Over here, this is a very perfect example of a fair value gap. This is a perfect example of a fair value gap. When market comes down here, it's bought inside here. You can see within this zone. So we had a buy inside that actually pushed up. So okay, sorry, I think that's my network. Okay, so and over here as well. So this is a fair value gap. This is a fair value gap. So fair value gap is something that when you learn, in most cases you don't unlearn, because in one way or the other, when you see it in the market, you'll be able to identify it easily. And even if it is that fair value gap is only thing that you are trading, trust me, you will make some things out of it. So this place as well is a fair value gap. So from here down to here, as you can see, so SL below here, and then the market actually bought inside there. It bought up a little bit before it retraced as well. You can see that. So this is a fair value gap. I can call this a fair value gap. This is not a fair value gap. Why? Is because this place comprises of this place. I do not have the real week like this week to come up a little bit like this. So like the way we had it here, so it's not a fair value gap. And this place is not a fair value gap as well. This is an imbalance. This is an imbalance. So don't be mistaken imbalance for fair value gap. They were actually different from each other. So this is going to be the end of our class for tonight on fair value gap. And I hope you find this class enticing and wonderful for you to understand. Just in case you do not understand, please go over through the video again and try to ask your question in the comment section or in my DM. And one thing that I want you to understand is that with this process, if you are able to discriminate in between fair value gap and imbalances in the market, is actually going to help you very, very well. So this is going to be the end of our class tonight, as I said earlier. And please subscribe and like to my channel. I wish you a wonderful day ahead of you, and good night.